It's a new year, and of course, a lot of things are set to happen in the economic year ahead. And let's break down what we can look forward to. Econometrix Chief Economist Azar Jammine. Quite an interesting year, I'm sure we'll be having, Azar. But coming up this week, we've got a number of economic data point releases that I think are an important indicator of the direction in which the country's economy is going. We've got mining production, which has had a relatively decent year, which I assume is largely driven by the commodities prices. Data coming out this week on Tuesday. Your thoughts on what we saw in the last set and what we're expecting to see despite headwinds of electricity and water issues that may come into play?
One must bear in mind that mining production has been supported largely by high commodity prices, and that has enabled many of these mines to increase output at least marginally over the past year. And we saw that again in October, and we expect the same to occur in November with a slight improvement possibly. What we are expecting in the outlook is a little less certain, and that is because the world economy looks on the brink of possibly slowing down significantly as a result of the spread of the coronavirus and the lockdowns, and more importantly, the supply shortages that have emerged as a consequence of all the lockdowns. And secondly, much of the stimulus that has been provided, both fiscally and from a monetary policy perspective, to help people withstand the effects of COVID-19 and the lockdowns, is being withdrawn, certainly in the world's major economies. And so it's possible that we could see commodity prices falling back again during the course of 2022, which again would provide further pressure on the mining sector to slow down production if that kind of environment were to materialize.
No, absolutely. Let's also talk about consumer inflation as well. We saw the last set of data, inflation coming in at around 5.5%, strongly indicating, which is what the Reserve Bank did say in its last MPC meeting, that interest rates are set to be hiked for the rest of the year. And of course, when we take that into account, as well as higher food inflation, not a really great outlook for the average consumer who's already struggling with a constrained budget.
Of course, it's a tight situation for the average consumer, make no mistake about it, and that's likely to weigh on economic growth, especially if you add the possibility that electricity tariffs might rise by more than 20% from April onwards. However, one needs to bear in mind the December figure due to be published this week is likely to prove to be a high point in the current inflationary cycle. We anticipate that the inflation print will come in at 5.8% for December, mainly on account of the sharp increase in fuel prices that took place at the beginning of last month. However, for statistical reasons linked to the fact that in the first quarter of last year, fuel prices began rising sharply, one is not going to see a continuation in the rise in the actual inflation rate in coming months, but rather a decline in that inflation rate. Bearing that in mind, the Reserve Bank may well use this opportunity provided by the alarming 5.8% inflation figure to raise interest rates at its forthcoming MPC meeting before we then see inflation falling back, and then the Reserve Bank be holding back possibly on further interest rate increases. But certainly it looks highly likely that we will see a further 25 basis point increase in the repo rate at the MPC meeting in 2 weeks' time.
Not great for those who've got debt, but something positive for those who've got savings. Azar, very last thought from you. Retail sales, those have shown a mixed picture since we saw the July unrest last year. A very mixed picture of the consumer spending habits in terms of, just engaging with the retail space. Your thoughts on what's set to come out, just based on the profile of the current consumer living in the pandemic?
One must bear in mind that these will be the November retail sales figures, which will incorporate Black Friday. And by all accounts, Black Friday turned out to be somewhat better than had been anticipated. And we had a prolongation of the period of special discounts that were provided. The average consumer, one needs to distinguish between the middle income groups and the man in the street who accounts for 80% of the population. The latter taken enormous strain as a result of COVID, layoffs, salary cuts, and the like. The middle income group, who account for no more than 15 or 20% of the population, have actually not felt the effects of COVID anywhere near as badly. And yet they are the ones who account for the lion's share of retail sales. So you may well see retail sales figures holding up reasonably well, despite the fact that the majority of the population is taking strain.